want to bring in Doug Kass, Seabreeze Partners Managing Director. All right, Doug, we've had the airstrikes in Syria. It doesn't seem to be having an impact on this market here, but what do you think? Because certainly headlines have mattered more than fundamentals recently.
Charles, international stress events like Syria have had only a fleeting impact on the market in the last couple of years. I think the market's giving a sigh of relief after a proportional strike by the administration. But I suspect we haven't heard the last. Assad was laughing at the limited moves by the administration, and I think the president saw that, and we will hear much more.
We certainly will, but there are other headlines, right? The president's personal attorney's office gets raided last Monday. Dow's up 450 points, clings to a really slim, gain by the end of the day. Those kind of things are having an impact.
Sure. Those are fundamental issues. I said to Stewart last week that I believe we're in a new regime of heightened volatility and compressed market multiples. I think there's a number of reasons. The first thing is the behavior of the president. The second thing is the increased economic ambiguities, both domestically and overseas. And the third factor, of course, is that the central banks around the world are pivoting to tightening and higher interest rates. And the most important thing to me is that I believe that President Trump will make market economic uncertainty and market volatility greater again. And there are some people now that are concerned that the president is a bit untethered and is conflating policies with politics, and that's a dangerous precedent in a world that's flat and networked. If I can paraphrase the character Vizzini in my favorite movie of all time, The Princess Bride, the Trump administration may be succumbing to one of the classic blunders, the most famous of which is conducting a trade war in Asia.
Well, and yet by the same token, everyone agrees that something is wrong with our trade policies, that we lose hundreds of billions of dollars every year in intellectual property, that we've had factories close here. And, maybe it may, and by the same token, the president's policies were pretty good for the market last year and pretty good until January 26th. And all of a sudden, it's the personality that matters more than the policies?
Well, I think the policies, to some degree, are poor. My buddy Larry Kudlow is a calming voice in the administration, but the economic handmaidens, as I see it, are Wilbur Ross and Peter Navarro, and these are trade hawks. And the basic assertion by Mr. Navarro is that there's an inverse relationship between imports and GDP. In fact, historically, there is a direct relationship between deficits and GDP. So I think we could be on the verge of a trade war, which the market is smelling out and is increasingly concerned about.
I think, I don't think...
There are stocks to buy, Charles.
Sure, okay. But, I mean, would you buy, for instance, a Boeing, which would be in the eye of that storm that you described?
No, I don't own Boeing. I own a little Raytheon in the defense area. My great investment scene is the following, Charles. Consider the market investors, market participants, in a room sitting on a golden throne made of gold, smoking a lot of pot and buying annuities. So my basic three themes are gold in a world of uncertain outcomes, buying marijuana stocks like MJ, which is the largest exchange-traded fund because of the administration's changing views and altering of Jeff Sessions, the Attorney General's view last Friday.
So they're doing something right.
And the third thing is buy annuities like Hartford Insurance and Lincoln National, in case things really go bad.
That's an interesting portfolio. Very conservative on one hand and sort of out there on the other one. Doug, thank you very much.
Let's call it a bell curve.
Okay, bell curve.
Thanks, Charles. Good seeing you.